gentlemen, hope your first day of the month was good and your Labor Day was also good. My name is Dr. Robert Mugo. Welcome to Financial Literacy Simplified. Today I want to teach about the considerations that you are supposed to have if you want to join a Sacco. In this country, there are so many Saccos. The town that you operate in, you may find there is a minimum of 30 Saccos. And the law provides that Saccos of similar objective, you should only join one. Sacco means savings and credit. So we are interested in the savings component and also the credit component. I will start with the savings aspect. For savings, you know here your money is in that Sacco. And where your money is, you must ensure that mechanisms to protect your money are there. Your money is in a Sacco in form of share capital, which is non-refundable, and we have share deposits, and these share deposits we have non-withdrawable deposits, the ones people in the normal language call shares, the ones that are normally used when giving you loans. We have FOSA savings. You may keep, a Sacco can operate just like any banking institution. You deposit, withdraw as you wish. And then we have fixed deposits. So, what do you need to ensure that your deposits or your savings are secure? One, you will ask yourself, is this Sacco regulated? Most of the Saccos, deposit-taking Saccos in this country, are regulated by SASRA, Sacco and Societies Regulatory Authority. It is also getting into even these non-deposit taking Saccos. The second aspect, you will need to ask yourself, how is the system of this Sacco? System here is what prevents your money being misappropriated, is what prevents people deducting 5 shillings from your account and you will not know. Are you able to get your statements as soon as you want? And are your statements as clear to understand as possible? Here, for system, we shall also look at, does this Sacco have Internal Audit Department? Do transactions in this Sacco have what we call make-a-checker? Make-a-checker means you cannot initiate a transaction and go all the way to the end of that transaction without having another person. You can imagine if that was allowed, somebody can give you a loan, somebody can withdraw money in your account without other people knowing. In terms of the system, we shall also be interested in what are the governance structures of this society. Do directors have a term of office? The next item I want us to look at, or I want you to look at, in terms of protecting your deposits, does this society adhere to the SASRA directives or SASRA advisory? The directives are, like for a deposit-taking Sacco, the CEO must be a CPA. Advisory is that treasurer should be, where possible, a CPA. The chair audit committee or the chair supervisory committee, where possible, should be a CPA. The purpose of having these people as CPAs, if something is done wrong in that society, these people can be professionally held responsible. This society that I want to join, what are the contributions requirements? Does it have minimum contributions per month or per annum? If you join a society where you can contribute January 2024, then you contribute June 2025, you should be very worried. A Sacco grows through savings. And if it cannot grow the savings, then there is an issue. We shall also be asking ourselves, this Sacco that I want to join, should I, God forbid, resign? What is the process of getting back my money? What are the number of days that I need to give as notice? What are the charges that they bring if I resign? The last aspect for savings, I want to look at, does this Sacco have insurance facilities? Are your deposits insured? Are your loans insured? This insurance comes into play in the event of death or permanent disability. You know, this is something that death is assured. Everyone will have to go through that. The only thing we don't know is when it will happen. In case of death, are your deposits secure? Will your deposits be used to clear your loans and your beneficiaries get nothing? So the next item I want to look at is in terms of credit. Credit is another very important aspect of a society. You want somewhere you will borrow money at the lowest cost, at the most convenient way, if possible, the fastest way possible. So this borrowing that I want to borrow, I will ask myself, what are the loaning conditions? Some loans require that your deposits can be multiplied times 3, others times 5, even some societies go even up to times 10, depending on the type of the loan. Here, you should be careful. You know, most of us, we want even our deposits to be multiplied even times 50. But you ask yourself, if you multiply your deposits so high, who will or where will this society get that money? Because it is savings of X and Y that is used to lend to Z and L. So if the multiplier is too high, you need to be a bit cautious. In terms of loaning, we shall ask ourselves, if you take a loan, does this society have share banding? Remember, in terms of deposits, we talked about what are the minimum balance. Now for share banding, assume I come and take loan of 20,000. The minimum deposit is 500. Another person takes a loan of 2 million. Will they also contribute 500? At times when we borrow, we want share banding to be as low as possible. But I tell you, if you want to join a progressive society, you must know that the larger the loan amount, the larger the expected deposit contribution. This is painful, but if you are of a progressive mind, if you want this society to be there for the next 50 years, for the next 100 years, know that the more or the bigger the loan you take, the bigger the deposit contribution that you make. These loans that you are getting, do they have the 1/3 basic pay rule? The government provides that you should not commit beyond 1/3 of your basic pay. That is law. Now, if this society that you are joining tells you, take for example, your gross salary is 60,000. They tell you, you can, and after, if the gross is 60,000, after all the deductions here and there, let's say you take home 43,000. Then they tell you, this 43,000 you are taking, we can even allow you to commit 42,500. Ukiwa tu unaenda na nyumbani na 500. If this society is doing that, it might be convenient for you as the borrower, but trust me, my friend, in the long run, this society cannot sustain that. You will find its members will be overdebted, and if there is overdebtedness, default is almost a guarantee. The next aspect regarding credit is, what are the guarantorship rules, or what are the guarantorship conditions? At times you may find, if you take a loan, the society will require somebody to guarantee you. In the event of this person being unable to pay, I assure the society that I will come in and pay this. My deposits can be used, or I can be deducted on a monthly basis to make good what has been defaulted. Guarantorship, you will ask yourself, does this society provide for self-guarantorship? Does this society, if it is guarantorship, what is the minimum number of guarantors? If it is about guarantorship, should the amount guaranteed be the same as the amount that you are taking as a loan? Last, regarding the security of your loan, you will ask yourself, do they have provision for collaterals? And this provision of collaterals, what is it? I want to take a loan. I want to use my logbook. I want to use a title deed. Do they have that provision? If I want to take a loan using my title deed, do I just bring my paper, live with the society that is the collateral? No. They must have good credit policy that shows if it is charging that property, co-ownership if it is something like motor vehicle. Remember, we are talking about protection of your money. So the loaning conditions or the credit policy must ensure that there are good guarantorship, good collateral policies. A society that will allow you to have guarantors, self-guarantorship, and collateral, the better. The other aspect we shall ask ourselves in respect to credit, if I want to take a loan from this society, now, is it possible to get a loan? Take for example, okay, let me just expound that further. There are societies that are employer-based. Let's say employees of University of Nairobi are the majority members in that society. There are societies that are industry-based. Take for instance, maybe Sacco. Here you find those in the energy sector, those who work at Kengen, GDC, Kenya Power, could find themselves in Stima Sacco. There are societies that are also for a particular business. Maybe there are societies, Law Society of Kenya could have Sacco, CPA, that is IcePack, could have a Sacco. Those in IcePack Sacco you find are in the accounting profession, or it could be even in a particular church. Now, take an example. You are a business person, you are a lawyer, then you come and join a society that deals with teachers. And how will you get guarantorship? And maybe you are even classified as class B or member category B or whatever category what. You may find borrowing money in this society could give you some challenge. They are used to people with pay slips. You have business income, and you know business income is more risky than pay slip. So you may find you have deposited money, but when it comes to loans, my friend, you are not able to get a loan. The last bit I want to talk about, and this touches on both deposits and loans. What are the costs of these loans that you are taking? The cost of loan, you will look at the interest rate. Is this society charging interest rate on reducing balance? Is it charging interest on amortization or flat rate? They could give the same rate, but interest cost is totally different. This is an area that we shall learn further about the cost of interest rates and so on. You need to ask yourself, ideally, you need to consider, is it reducing balance? Is it flat rate? Is it amortization? This loan that you are taking, what are the initial costs involved when taking this loan? Does this society have a loan processing fee? How much is it? Does this society have a loan insurance fee or charge? How much is it? You may find some societies could charge you as high as 8% interest rates. So this is something that you need to consider. You will also look at what are the returns on the deposits, what we call dividends, what we call share capital, share deposit rebates. What are the returns? I want to stop at that. Let's keep learning more.